Good afternoon, everyone. This is with Stu Ellis with his report on this morning on back roads of Illinois. I am Cesar Delgado. Here's Stu Ellis with his report.
A weekly Corn Belt digest of marketing, economic, agronomic, and management information. Commodity market price drivers. It was a weather and war week in the markets. December corn ended 22.5 higher. November beans were up 31 Ghanaian cedis, with Chicago wheat climbing 36 Ghanaian cedis. Wheat and corn led the rally to start the week, with Russia pulling out of the Black Sea grain initiative and escalating the war with a series of air attacks on Ukraine export cities. The weather was also a bullish factor with hot and dry extended forecasts pushing the market early in the week. However, the 30-day outlook from NOAA indicates August would turn cooler and wetter. Various market research firms have cut their yield projections for both corn and soybeans. With all those market drivers last week, what could happen now? Chip Nellinger of Blue Wheat Agri Marketing says there's been so much changing narrative about whether the grain deal will be renewed or not, but the deal has continued to be renewed. He thinks that's why traders were slow to respond to the news. But I think by the middle of the week, it was apparent that Russia was playing hardball. They started attacking some Ukrainian ports and said they may look to fire upon some of these ships that are moving into the Black Sea towards Ukraine. And that really is what spooked the markets and got the algos coming to the long side on the headline. Eric Snodgrass of Nutrient AG Solutions says, we're going to be talking about temperatures that are going to be in the mid-upper 90s as far north as MN and the Dakotas, and then possibly there's going to be some pockets in Missouri, Illinois, NE, KS that are going to be over 100 degrees Fahrenheit, says Snodgrass. And so, we always worry it's going to last. Is this going to be a 3 day event? Or is there going to be a 10-day event or a 30-day event? There's humidity in this pattern. So, will there be storms that blow up in the middle of this and bring some cooler weather? Corn Belt Update July 24, 2023. The failure to extend the Black Sea grain deal is affecting the grain markets. Dr. Kim Anderson, grain market economist with OK Street, says Russia seems determined to stop wheat and other exports out of Ukraine. I think the market's already got that factored in there. Underlying that is Russia has been putting a lot of rockets and bombs into Odessa, and I think Russia is determined to stop wheat exports and exports out of Ukraine for a while. Another factor under there is Russia has got a tremendous amount of wheat it needs to sell in exports. I mean, they're looking at a 3.1 bill food crop. Their average is around 2.1. They're looking at increased carryover. Their projected exports are over 1.7 bill food. Their average is around 1.2 or 1.3 bill. They need to move a lot of grain, and Ukraine competes with Russia for that wheat market, and I think they want to put a halt to that. Ukraine exports multiple commodities, but Anderson says the markets mostly focus on wheat. They were the fourth largest exporter of wheat. They're now the 5th. They were at around 9 or 10%. They're down to 5% now, maybe below that. But their big export is corn. They were the 3 RD largest exporter of corn at 15% of world corn exports. They're projected to be the 4th largest at 10%, so corn is important. They also export sunflower meal and sunflower oil, and they do export some barley. He says the Ukraine conflict is affecting the prices of wheat and corn. Well, of course, you've got higher wheat prices. We've seen a 45 to 50 Ghanaian cedis, maybe even up to a 60 Ghanaian cedis price increase. If you're looking at forward contracting the 24 crop, you're looking at around $7.50 to $7.60 corn. Now that was, I think, a surprise to some people because they neglected to look at the corn exports out of Ukraine. We've seen a 65 Ghanaian cedis increase in corn prices, going from up to around $5.25, maybe $5.30. They were down as low as $4.60 at one time, so you got higher prices there. Again, it goes back to what's going on in Ukraine. Russia has officially abandoned the Black Sea grain deal. Joe Vaclavic of Standard Grain says the question is how long the deal will be off the books. It's canceled for now, but Russia has kind of left the door open. They said if our demands are met, we could, again, continue the brand deal. So this is something that could be suspended for a day, a week, or a month. We don't know. In terms of the impact on the market, Monday, we rallied early on this news, and then we sold off. So I think, at the end of the day, it's not the biggest deal in the world. You have to remember, Ukraine has become a much smaller exporter of all these crops since pre-invasion type days. Pre-invasion, I went back this morning and looked at the February 2022 WASD report prior to the invasion. USDA was projecting at that time that Ukraine would account for almost 12% of all global wheat exports, so they were a pretty big deal, right? Well, this year, the projection is that they're going to account for 4.9% of all global wheat exports, I believe, a much smaller percentage. So, I just don't think it's the deal that it used to be. It's probably more important to the corn market. USDA projects, I believe this year, they're going to be just south of 10% of all global corn exports. Even if the deal is suspended indefinitely, those numbers aren't going to go to zero. They're still going to rail the grain out west through Europe. That's been going on for a while, so I don't know. I don't think that's the big market mover here today. Actually, I think the weather forecast is the bigger deal today. And Mike Zuzolo of Global Commodity Analytics agrees with Vaclavic at this point. But he says the markets aren't just looking at domestic weather. I think what we're seeing now is what I would refine from US weather to global weather. We do have a global weather issue out there this year, unlike some of the most recent years. And what I mean, it seems as though Southeast Asia and Europe are still baking and flooding at the same time. And it's hitting both the European and Southeast Asian areas to the degree that I think it's attracting the market attention. So it's not all about the US weather. I think we do have a global weather scenario that has to still play out in these markets. Zuzolo says another driving factor in the markets is a drop in the strength of the US dollar. I did not see a dollar index reversal coming until after the Federal Reserve gets done talking on July 26th. The trade. However, after the consumer price index numbers and the producer price index numbers, feels so confident in the idea that the Fed will stop raising rates and we will not have anything after this month, or if we even have one after this month. They have turned the dollar lower on a weekly basis. We're down almost 3% on a monthly basis. We're down almost 4% just in the first 2 weeks of July. That puts us down to levels not seen since a 4.5% reversal in 2022 and a 5.5% reversal in 2020. He says a falling dollar could lead to renewed strength in U.S. commodity exports. I think it also opens the door up to the potential that we could start to gain that demand back in real exports of grains and meats faster than what I was expecting. I was expecting maybe we start to see that in the early part of 2024. But this is right underneath the global weather issue when it comes to the top two things I'm watching. Who is making money with soybeans? Susan David of NobuelLag.com says the soybean crushers are doing quite well. Thank you. What a spectacular move in board crush as August finished the week making new contract highs, up 41% on the week and 99% the past 30 days. Limited old crop stocks, large downtimes in the coming week, slowing RG crush rates and a soybean oil market rallying alongside sharply higher energies all had a hand in the move. Soybean commercials may have better ways to control stomach acid than most farmers. The latest NOPA crush, released on Monday, was a disappointment at 165 milbu, coming in below even the lowest pre-report estimate and down almost 13 milbu from May. Corn market drivers. Groups in Brazil revised their safrinha estimates and raised it to 4.22 bill. Boo. This elevated total Brazilian corn production to 5.4 bill, compared to the latest USDA estimate for a 5.23 bill. Boo crop. Brazilian firms are also putting exports at 2.1 bill. which is just under the USDA figure as domestic usage is expected to increase. The International Grains Council raised its world corn crop outlook to 48 bill. An increase of 350 mil from last month. The rally in corn values has started to weigh on ethanol margins, but these are still favorable for most manufacturers. Corn is still finding support from Chinese buying rumors, with thoughts the country picked up between 20 and 25 vessels in the past week, although most were reported from South America. A hesitation to pull too much weather premium out of the market is also keeping a floor under futures, while there are production concerns on them. U.S. crop trade is starting to show more attention on the demand side of balance sheets. Old. Crop corn sales are down a large 34% from last year, and new crop sales are already 39% behind where they were a year ago. This has new crop corn bookings the lowest since 2019. Price is a major issue for corn demand right now, but buyers are also looking at a 2023/24 South American crop that is forecast to be 800 mil larger than this year. Even if the South American crop is not this large, buyers are showing no urgency in extending coverage at today's values. Reports from the southern U.S. claim harvest is just weeks away, which will be heavily monitored for yield data, but will also add bushels to an already full supply line. The percent of the U.S. corn crop in drought conditions decreased 9% last week, but still stands at 55%. This compares to just 29% last year and warrants elevated risk premium. For the week, December futures gained 22.5. Soybean market drivers. We continue to hear rumors of China actively booking imports. But at the same time, the country is struggling to sell its domestic reserves at auction. Crush. Margins are collapsing in China, and their appetite for imports is following. China has imported 188% more palm oil and 40% more soy oil than last year, which is lowering their need for whole soybeans. The board crush margin for August in the U.S. currently stands at $2.21. The attaché in Argentina lowered the country's soybean crop to 780 mil bu, well below the 920 mil the USDA is using in balance sheets. The addition of risk premium ahead of forecasted heat in the Midwest gave the soy complex support. High temperatures are also impacting the Canadian canola crop and gave soybeans additional support, as did light technical buying. Officials in Argentina are reporting record low crush volumes, which may bring the U.S. more demand. This is expected to be short-lived, though, as the same officials believe Argentina will produce a 2023/24 soybean crop of 1.85 bill. 90 mil more than the USDA is using in balance sheets. Total South American soybean production this coming year is expected to be at least 1.1 bill, larger as normal weather conditions return. Same as with corn, importers are willing to wait and see if this is accurate before extending coverage at this time. This is being reflected in new crop export sales that are down 65% from last year. Drought is now affecting 50% of the U.S. soybean crop, an improvement of 7% on the week. This is still above the 26% in drought a year ago. November soybeans rallied 31.14 during the week. The International Grains Council took notice of what IL farmers have done this spring. IGS says, although the latest USDA acreage report scaled back 2023/24 U.S. soybean seeding, most notably in ND and IL, production is presently forecast fractionally higher than trend yields, albeit as the coming weeks are crucial for crop development. China's corn stocks are declining, while global corn stocks are increasing. This year will the third consecutive year China's corn inventory has diminished, according to the International Grains Council. IGC says global stocks will increase sharply due to anticipated increases among major exporters, most notably the U.S. The U.S. may have exportable stocks, but will they be of interest to foreign buyers at U.S. prices versus other global prices? The IGC projects the world will produce 48 bill of corn in the 2023/24 crop and marketing year. In a related note about China, it has been buying soybeans at a near record pace, if not a record. Reuters commodity analyst Karen Braun reports China's imports of soybeans were a record for the January to June portion of the year. June imports were 377 mil bu, some 25% above June of 2022, and for the first half of 2023, China's soybean imports were 1.93 bill. a 14% increase over last year. The wheat ride was an up and down one last week. It managed a $1.30.
Thanks, Stu, for this report on the crop markets. We are going to have the article from Dan Grant from Illinois Farm Bureau on the podcast.
Crop conditions show gradual improvement. Corn growing in Moultrie County appears to be reaching for the sun. Crop conditions subsequently improved for a third straight week statewide with good to excellent ratings up to 41% for corn and 40% for soybeans as of July 17th. Photo by Katrina Rawson. Crop conditions continue to improve in Illinois following a dramatic shift in the weather pattern so far this month. The state received an average of 3.41 inches of rain the first half of July, more than double the average, 1.6 inches, for the entire month of June, according to the Illinois State Water Survey. Crop conditions subsequently improved for a third straight week statewide with good to excellent ratings up to 41% for corn and 40% for soybeans as of July 17th. That's up significantly from June 25th when condition ratings bottomed at just 26% good to excellent for corn and 25% for soybeans at the peak of the drought. But it's still down substantially from last year when good to excellent ratings totaled 70% for corn and 62% for beans as of July 17th, according to the National Agricultural Statistics Service Illinois Field Office. Crop ratings are very low right now, but they've come back up some. Emerson Nafziger, University of Illinois agronomist and professor emeritus, said at the Orr Agricultural Center Agronomy Field Day near Bayless July 19th. What does this mean for yield potential? It's obviously still early in the season, so farmers shouldn't get too wrapped up in the crop ratings, Nafziger said. I do think the crop ratings are better than the numbers tell us they are, Nafziger said. As of today, this crop has good potential. We tend to forget the advantage we gain with a dry start to the season, he continued. We had no standing water, so all the nitrogen there early on is still there, he said. When we did get rain, the first few inches disappeared into the soil and didn't get into the tile lines. The crop took up the water and the nitrogen. Soil moisture at the 4-inch level increased 47% statewide and more than doubled in the north so far this month, according to Jenny Atkins, Water and Atmospheric Resources Monitoring Program Manager at the Illinois State Water Survey. Soil moisture ratings also increased in all regions of the state at the 8-inch level this month. But ratings declined by 13% in the south and 10% in east central Illinois at a depth of 3 feet and beyond. The crops subsequently are still dependent on timely rainfall at critical development stages, just as the heat dome in the south is forecast to expand into the state this week. Corn silking reached 70% in the state July 17th, 11 points ahead of the average pace, while 19% of the soybean crop was setting pods. We're going to need more rain, Nafziger said. One of the things this corn crop continues to struggle with is unevenness created by the stress. That's one thing the rainfall isn't going to cure. As for soybeans, they're still in a stage in which they haven't decided how many pods they will have. Blankets of smoke from the Canadian wildfires also potentially slowed the crop development process. We've been worried a bit about the smoke from Canada. I don't think it will have a big effect, but it will have some effect on the crops, Knapziger noted. It does cut sunlight intensity. Photosynthesis drives this whole process. Nationwide, good to excellent ratings on July 17th totaled 57% for corn, up 2 points from the previous week, and 55% for beans, up 4 points. Winter wheat harvest was nearly complete in Illinois as of the same date with 95% of the crop in the bin. But wheat harvest was running behind nationwide at 56% complete compared to 69% last year.
Thanks to Dan Grant for this crop conditions in the state of Illinois. This morning's commodity prices in Chicago. Corn was up for $5.56. Beans are up in 15.04. This is morning commodity markets with me for this afternoon. You've been listening to Back Roads of Illinois. I am Cesar Delgado. Have a great day.